Well, this is the big M&A story of the day. As you can see on your screen, Torrent Pharma has acquired the branded formulation business of India and Nepal of Unichem Lab. There you go on your screen, Torrent Pharma. Yes, the branded formulation business of India and Nepal of Unichem Labs has been acquired. This is a deal which was expected to be about 3,000 crore rupees. We have with us Ekta Batra and Nisha Poddar, who broke that story with us. Any details coming out, or is the valuation what you were expecting, Ekta?
We still don't have the valuations, but I just want to say that 840 odd crores is what they did in FY17 in terms of numbers. I have the press release with me. It is going to be a slump sale. And it's for a consideration of 3,600 crores. So let's put that out, that it's a consideration of around 3,600 odd crores. So I think that would work out to be around 4 times its FY17 sales. And if you're projecting around 925 odd crores for FY18, it still works a little below 4 times in terms of FY18 sales. So
we have Prakash Diwan with us. So Prakash, pretty much all right, we'll reconnect with Prakash Diwan. So this is exactly what we had been talking about. For $130 million, $500 million odd of the valuation. It is slightly higher, but it's 4 times the EBIT, the sales of the company, and it is the India-focused business which Torrent Pharma is buying from Unichem. Now, Ekta will throw more light on this, but clearly 57% of the business contribution comes from the India-focused business of Unichem, which is being sold to Torrent Pharma.
I just want to interrupt you all, because we have now the deal valuations. I just want to put this out there that 4.28 times the FY17 domestic sales. So on a trailing basis, it's a little more than what the street had anticipated on a trailing basis. But if you're working with, say, a future projection of around 925 odd crores in terms of FY18 domestic sales, then it works out to be around 3.89 times. So that's largely in line with what the street was anticipating, that it is going to be probably up to 4 times. So in terms of valuations, it's not a surprise. In terms of valuations, it's largely in line with what the street was anticipating. We were working with a range of 3,000 to 3,500 odd crores. You can't really quib about, 3,600 odd crores. We have Ameya Chalke, who's joining in to talk about the deal. Ameya, hi, thank you very much for joining in. It's 120 brands that they're going to be acquiring. First on the valuations, 3,600 crores. And Unichem just came out with its numbers. Domestic formulations was up 17% for this quarter itself. So it's bounced back. Put it into perspective for us first on the valuations.
So I guess Unichem has achieved good valuation, at least in terms of selling out their domestic pie. So for Unichem, I believe it is a good deal. Because in the past, most of the deals have been in the range of 3 to 5 on top of size, basically 3 to 5 times. So I guess, and considering the kind of portfolio Unichem has, which is of older molecules with low growth, so that is a good deal.
Okay. We have Vishal Manchanda, pharma analyst, and Nirmal Bang also joining in. Vishal, I request you to hold on. We also have Vikas with us, our in-house pharma expert. Vikas, you've seen the details of the deal in line with what we had been anticipating so far? Yeah, we are very much on track on what we actually said a couple of days before when Nisha and Ekta broke the story. It's exactly what had been anticipated. The complementarity is there. The timing of Torrent entering the deal is also extremely important. And, Torrent has been managing acquired brands very well, which probably will give a nice boost to this set of products, which have been growing at lower than industry average. Okay, I just want to add a couple of important details, and we should probably put this out as well, where Torrent is now going to be ranked number 5 in the market. Its market share is going to improve by 1%, and that's because Unichem has market share of 1%. So its market share is going to go up from 2.4 to 3.4%. That's important. Torrent will now be amongst the top 10 players in 15 out of the 20 specialities, and amongst the top 5 in key 7 specialities.
And also the acquisition will add a brand of 200 crores, which I think they are obviously Vikas referring to Losartan. And 3 brands of more than 50 odd crores to its existing portfolio. Right. Top brands include Losar, Unienzyme, Ampoxin, Telsa, Visilac, which is all going to be added into Torrent's portfolio in its existing key therapies. The market share in cardiology will increase from 5.6 to 8.6%. That's very important because Unichem's majority of its drugs are in the cardio space. Yes. And CNS is going to go from 6.4 to 8.4%. Gastro is going to go to 3.9 versus 3.1%, and also 3,000 plus employees will get added to Torrent's existing employee pool. I think that's very important to put out because there was a lot of speculation on how many employees are going to be added in. Also, distribution will be enhanced by the addition of 2,000 stockists in the country. I just want to get Ameya in on this. Ameya, I just want to get your thoughts on the fact that 3,000 employees are going to be added onto Torrent's balance sheet, onto Torrent's P&L. They have integrated Eldo in the past, but how do you think this is going to work out, and do you think it will probably eventually pressure margins? Do you think that that could be a concern, integration as well as margins?
So if we have to talk about domestic business of the Unichem, it was good profitable business, and I guess the margins would be upwards of 20%. So if we consider that kind of a figure, then I don't think so there would be a pressure on their EBITDA margins for Torrent. But if this deal is funded by debt, then obviously the EPS impact could be higher.
So if I can come to Vishal Manchanda joining in the discussion as well. Vishal, how do you read into this transaction from the Unichem's point of view? Now 57% of contributor is now going to be sold to Torrent Pharma. What is left with Unichem and the shareholders there for them to be staying put in that particular company? How do you see that particular stock really performing and the rationale?
Yeah. So basically 3,600 crore is what Unichem would receive from the transaction. Then what we have to really see is there would be a capital gain tax that would apply to this transaction. So the net receivable proceeds would be lower basically in hands of the company.
So how much do you think net they'll get?
My sense is assuming, so they have about I think 800 crores of gross block on their balance sheet. So majority of that, assuming majority of that is for the domestic business. So we can look forward we can assume capital gain of around tax of 500 to 600 crores on this transaction. Or so it could be higher a bit. You're
assuming maximum say 2,800 crores?
Of capital gain from the transaction.
Eventually, which will come to the kitty for Unichem post the deal?
Yes, post capital gain tax.
Okay, and what happens in terms of the leftover business, Vishal? Because Unichem doesn't have much in its portfolio when you talk about the international business. Most of them is, largely EBITDA negative.
Correct.
So how would you treat that then?
So how I would look at it is the residual business is about 700-800 crores. So assuming that trades at about 1.5x sales. So that is how normally businesses that are not domestic would trade in the market. So that would fetch a value of about 150-120 rupees per share on the markets, the residual business. And there will be an additional cash that people would value on the balance sheet. And then it would come to how the promoter wants to return the cash to shareholders.
Yes, that will be actually very important, because what the shareholders now clearly expect the promoters to do is to reward them with this cash that they are going to get from the proceeds of this particular transaction, because the entire company is not getting sold and what is being left over is not generating any profits for the company as well. We have Keval Handa also with us. Keval, good to have you on CNBC TV18. Now, first, this large transaction, Unichem has been looking for a buyer for a very long time. How do you see this transaction in terms of the overall pharma space, and also knowing the fact that many international players who are eyeing this asset at higher valuations, but finally it comes to Torrent Pharma at almost half the price?
You see, when you look at these mergers... Hello, can you hear me?
Yes, go ahead, Keval.
If you look at these mergers, we have to look at from both point of view, the seller as well as the buyer. As far as the Unichem is concerned, I think the business was sort of more on the price control, though it had an equal spread of acute and chronic diseases. But the growth was not happening domestically. And that piece of the business which was not growing is a piece of business that they really handed over to Torrent. And I think they maximized the opportunity in that piece of business.
How would you assume, Keval, what would you think about the valuations of the deal, which is around 3.9 times FY18 domestic sales?
I don't have the EBITDA of the domestic sales. If you have an EBITDA of a domestic sales, and then maybe it's in the range of 15 to 16 times of EBITDA, I think so. Or maybe in the range of it is a domestic sales is 1,000 rupees, or maybe 900 to 1,000 on the top line. It's about 2 in terms of revenue, and maybe 15 to 16 times of EBITDA. So it's very conservative because it's a domestic sale. Now, as far as the Torrent is concerned, I would look any merger from 2 points of view: the product fit and the culture fit. I think culture fit is possible because in both being almost having similar type of culture, though there's not much of a difference between the. Yeah.
Torrent is going to take on 3,000 employees, Keval. In your experience, they've integrated Elder in the past. It's taken them 3 to 4 years to do that. But in your experience, in the current environment that we're working with in the domestic market with price control, etc., what's your sense in terms of integration as well as challenges that they might face?
The biggest challenge is integrating the businesses with those number of employees they are taking over. To my mind, that would be their biggest challenge to start the kick off the business. And given the fact that you are taking so many large number of employees, and in a business which is not, margins are not very high, this is going to be a need for synergies through people. And therefore, I do not know what Torrent is going to do in terms of their consolidation strategy of different businesses. Are they going to keep the businesses of Unichem separately? They're going to merge with some of the businesses. Obviously, keeping separately and running would be a big drain. They will have to merge it. They will have to synergize it, reduce the manpower, reduce the channel cost, the distribution cost, and so on and so forth. So there would be a whole lot of integration required, and that may take somewhere around about 1.5 years to 2 years for the Torrent to settle down.
Right. Let me go to Prakash Diwan on this as well. Prakash, of course, we've been talking about this transaction now for last few days, and this was really expected. Now, looking at the final valuations, 3,600 odd crore rupees for a, for the assets which had the revenue of about 840 odd crore rupees. So it's clearly 4 times. And in terms of capital gains tax, there will be an outgo. So it would land up being close to 3,000 odd crore rupees in terms of cash in hand for Unichem. How do you rate Unichem as well as Torrent Power after this transaction? Pharma, sorry.
Yeah, no, I got it. So what seems like happening is that Unichem was struggling with its domestic business. They have ramped up, feet on street and a lot of channel presence. But somehow, the products that they were trying to launch, they were more towards the OTC side, which was not kind of, giving them enough traction. It's probably that's one of the reasons why they've decided to get rid of it. But that doesn't leave much of business on the international circuit. I mean, whatever is left is really not too significant now. So that's one thing that Unichem would have to grapple with. For Torrent, of course, it's a good acquisition. They have a good presence in most pockets of the domestic market. And
so
with Unichem's,
on Monday, what do you expect the stocks to do?
So honestly, they'll have to work out the exact math in terms of how it impacts them. But I would believe inflow of cash on Unichem's books will definitely be a positive. But quite a bit of that is already priced in nature. But Torrent would probably, if once they share their plans how they want to use this piece, they could also probably either long run could benefit out of this.
Would you recommend, Prakash, would you recommend your clients to buy Unichem just based on the cash that they're receiving?
You know, it's a tad late to do that, but it would still have some sense. So whoever is holding would probably be able to get out at a higher valuation. That's for sure. So they'll benefit. But a fresh buy, to be honest, at this stage, it's a bit late.
Okay, our last word to Vikas. He's been patiently looking at the deal. Vikas, any unanswered question? The deal will be completed by the end of the year. So, in terms of regulatory approvals, it should be a smooth sailing?
I think there will be a little overlap, which is manageable, and in a large deal like this, it is a given. The thing is, it's all pointing out to one thing, that, you know, the juice is still left in the Indian market. When the rest of the world is really not giving you the right revenues, US, we know how bad is the pricing pressure. I think there is still a lot of scope and opportunity left in the Indian market, and these products can still be grown in many different ways. So I think Torrent will probably, it's a set template which they will play out again for the Unichem buyout.
Okay, Vikas and ladies, thanks for joining in with that. We will continue and take the story forward through the day. But